Good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for our morning session. Bear with me a moment. I'm a couple minutes late setting up the rest of my charts. I got sidetracked doing email, which is always dangerous. Just throwing the trade manager on a few more charts. For those of you new to our room this morning, welcome. What you're looking at here is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Scalper. The top right is the Falcon Swing Trader. The bottom left is the Eagle Trend Trader. Now, each of these tools have been specifically designed to pick up certain market conditions. It's not simply that it's the same program on a larger time frame. That's not it at all. These tools have been specifically designed to pick up scalp, swing, and trend signals. The last tool that's here in the bottom right corner, this is the Raptor. The Raptor is the latest addition to the DTS family. The Raptor is kind of like it is a hybrid, I suppose. It incorporates elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into one trading tool. Now, I'll show you how all these tools work here this morning. Just a real quick overview regarding the signal generation. You're going to see a lot of arrows and whatnot here. Signals all develop the same way regardless of the tool. And it looks like the Raptor's been absorbing all the warning dots, so hold on a second. Oh, here we go. All signals develop first with a warning dot and an audio alert. Once we have that, it kind of draws our attention to that particular market. Then we're on the alert for a triangle and a hash mark to print. That tells us that the trade parameters are met and it's time for us to make a decision. You can see here on the Raptor, some of the warning dots have been absorbed. See, right now we've got a warning dot and we got the audio alert. So we're looking here at the Raptor. And once this trade parameter is met, well, then we're going to get the triangle and the hash mark. And sometimes the tool, especially the Raptor and the Eagle, actually, sometimes that warning dot will be absorbed. We don't take every single signal, however. We're going to look for our high probability setups, and there's not that many. There's about, well, I suppose the Hawk Scalper has the most. There's 5 basic signals that we look for, and then there's about 3 signals in the Falcon, 3 signals in the Eagle, and I guess about 3 or maybe 4 signals in the Falcon in the Raptor that we're going to focus on. The charts I'm following here are the NASDAQ. I'm also watching gold and crude oil, but please don't be shy. I would be happy to take a look at any market which is of interest to you. And your questions are most welcome. All right, so let's see what's been going on here. Let's take a look at the overnight. Well, it's a little bit of a decline. Looks like prices continued to swirl during the Asian session. This is here on the Eagle Trend Trader. Came back, gave us a trend change signal just prior to the London Open, and then it looks like about an hour into the session, we got another sell signal. See the warning dot, triangle, hash mark, the signal was complete, and we ended up with another short opportunity. So we've actually got a bit of an opening gap above the market here. And we're right kind of in the thick of it, only about 3 or 4 minutes into this session. Remains to be seen whether or not the market's going to try to get into that gap. Yesterday, this whole price around 4,400 was fairly influential, so that's a number to keep an eye on today. Or whether trading will continue to slip lower. Right now they're on the decline, so let's see if we can't get a foothold here. All right, well, here comes the hawk scalper with our warning dots, so we know there's a signal printing. This is actually one of our high probability signals. This is what we call the first micro-macro cross. And it occurs when the micro line, that's a thin one, crosses the macro line and everything comes into sync. So bars are the same color, filters are the same color, trend lines are the same color. This is a high probability signal for us. Now I know you're looking at this and you're saying, whoa, Eric, what are you doing putting your stops way up here? Well, there's very little structure going on here. And what we'll do is, because this is just a single and because it looks like we're trading near the overnight lows, I'll see if we can't run this one out. Market searching for some direction this morning. The tool I'm using here on the right-hand side, this is a very important tool. Very important tool. This is called your trade manager. And what the trade manager does is it controls, well, it has two components. First off, it controls your risk. So regardless of where I place my stop, at the moment I've got my risk capped at 2%. And what I'm going to do is I'm going to run out my, oh, we got a positive slip on that one. I've just deleted my break-even target and my profit objective. Hopefully the market will run out here a little bit and I'll be able to show you how some of the stop strategies work. But regardless of where I place my stop, so whether, and I'll show you this again in a moment, whether I place my stop really, really tight or whether I place it a little bit more conservative or even ultra conservative, the risk amount never changes. Never. It's always the same. It's always contained at 2% of my capital. So that's part one of the trade manager. Part two of the trade manager is the trade manager component, or the profit manager component, if you will. And you see these blue dots that are on here? This is my stop strategy. I've got 16 different stop strategies to choose from, and they're all customizable. I can change their settings. So let's say currently I'm on the ATR setting. Let's say I want to make it a little bit more conservative. I want to dial it back. I can do that. And what the trade manager will do, once I activate it, it will roll my stops according to the stop strategy. So let's go with something a little more conservative still, so maybe you can see it roll the stops down. So I'm going to enable, you're going to watch the trade manager take my stop from up here and move it down there. All right, so now trade manager has control of my stops because I've enabled it. And should the market head lower from here, you're going to see the trade manager automatically roll my stops a little bit lower. Now we have hit our profit, our high probability target, and we've also hit our break-even trigger. But I'm going to see whether or not we can't sneak a couple of ticks out of this so I can show you how it actually rolls the stops for you. The beauty of this is, you see, a lot of traders are confused about well, first off, where should they get into the trade? So that's why we've got the high probability signals. Once they're in the trade, it's like, well, how do I manage this trade? Well, that's why we've got all these different stop strategies for you. You can put one on, you can see how it's kind of been following the market, and if it looks like it's following the market pretty well that day, well then go ahead, use that stop strategy. And then last of all, the part that's most often ignored about trading is the risk component. Traders, I cannot tell you how many traders come to me for coaching. They're risking far too much money. They're risking far more than they can afford to lose. The trade manager never allows that to happen. So even worst case scenario, let's say we held our stops way up here still, and I get stopped out for the full amount. That is an amount I can afford to lose. That's only 2% of my trading capital. And I see I may have to dial it back here a little bit still just to try to ride out this swing. Oh no, sellers are kind of showing up. If we can get another bar lower here, I would have rolled my stop above this high anyhow. Because what we're seeing is we're seeing the sellers recommitting. There we go. All right, so it's a good time to roll your stop. If you have a deep stop, if you're trying to mirror a trade here, good time to bring your stop in above this little itty bitty swing high. Good question, Tom. Tom asks, are the stop strategies categorized from conservative to more aggressive? No, not really. But you'll learn very quickly that you can make them more conservative or more aggressive. Oh, did you see that? It actually rolled the stop just a little itty bitty bit as we're trying to ride out this sideways action. The two most aggressive stop strategies are right here in the middle. They're the parabolic strategy and the bar high-low. The bar high-low will take you out at the very first sign of weakness, and then the parabolics, here, let's show you what the parabolics might look like. I don't know if you can see, I've got the preview button on. Can you see those orange hash marks? So you can preview your stop strategy. You can say, maybe I should, if you were, let's say, in a move like this and you have all this open profit and your current stop strategy is back here and you're thinking, gee, maybe I want to protect more of that. What would parabolics look like? Well, this is what it shows you, what the parabolic strategy would look like. And I do that quite often. You'll see in the trading room, if we get into a bit of a trend and we got a little bit of open profit, I'll very often roll or change my stop strategy into something more aggressive, like the parabolics or perhaps the bar high-low. We're probably going to see the market try to run our stops here, but we might luck out. We're getting a 4-arrow consolidation. This is also a high probability signal for us, so last chance for the sellers. If we get a couple bars lower here, I will force the trade to break even. It's still a little bit early to take the trade to break even at this point. But this is, I cannot tell you how important to your trading success this particular tool is. And I know I don't want to sound like it's a sales pitch. It's not. Okay, so we're down here a couple ticks. I'm going to force the trade to break even now. And what will happen now is if the market continues lower from here, the trade manager will actually pick up my stops on the way down. So let's say I go to a parabolic strategy now. Oops, got to go back to break even. As the parabolics come down, well, all right, we got tagged to break even. But as the parabolic strategy would come down, it would actually pick up my stops and move them lower for me. But it looks like we've hit a little bit of a sideways stretch here. Problem we're facing right now, not a lot of structure up here. So the market may try to drift a little higher before it tries to head lower again. All right, but there's a kind of a real quick overview of how all that works. The Raptor, on the Raptor, I have a slightly different version of the trade manager. This is called the Trailblazer. And what makes the Trailblazer different is you're going to notice it doesn't have that risk management component down here. And why is that, you ask? Well, we had some owners who were trading some very fast markets, and they were saying, I need a one-click entry system. Just let me hit the buy or sell market buttons, or place an order and pull it in. I need to have everything activate with one click. I don't know if you noticed when I did the trade manager, we need to click for our profit target, and at the very least we need to click for our stop loss. I have preset profit targets, but you can even manually set your profit target. So let's say you wanted to enter here, stops down here, and your profit target up there, and then you need to click submit, right? So there are a couple of clicks that you have to do. And we had some owners who were trading very fast markets, and they said, I need a one-click system. Just let me get in with one click. Well, that's the Trailblazer. So when you're using the Trailblazer, you preset your orders up here, and you preset your profit targets. So right now, I'm going to take 2 contracts, one with a 20-tick target, one with an open target, so it's a runner. And we're getting a soft edge buy signal here. So we'll see if we get back here with another buy signal, and I can demonstrate this. The Trailblazer kind of needs you to know, or you need to know roughly what your average position size will be, however, so that you don't end up overextending yourself. Okay, we got some selling going on here, but they kind of put the brakes on it pretty quick. All right, let's see if we get that buy signal now. I'll get a swing low strategy going. There's the buy signal now. So you see, all I do is I hit the buy market button. Here's the buy signal. It's a soft edge buy, so we're anticipating the market to head higher. And don't worry that you don't understand what some of these signal formations are like. We go over these every day in the trading room. And if it's your first time here, the soft edge buy simply means it's a signal that produces off of the soft edge of the Raptor cloud. You see this cloud here? That's borrowed from the eagle. And we anticipate a little bit of a rally from here, at least to the hard edge. So you see, I've got my break even, my auto break even trigger in play. You can preset these as well. I've got my first profit target set according to my 20 ticks here. And hopefully they'll head a little bit higher from here, and you'll see it actually engage the break even trigger, so it will pull the stops from down here to break even. And maybe we'll even manage to get up to our profit target. Okay, so a little bit of a reaction. I don't know, it could be another bearish kind of day today. I would like to see them try to get up to 4,400. That would certainly fill that gap, but it's hard to say at this point. It could just be another sideways day as well. Goodness knows we've seen a few of those. Come on, get up there. Yeah, sure, Tom. Tom asked, can you actually point to the soft edge sell signal? That's this one right here. Or pardon me, soft edge buy signal. It's this one right here. Now let me show you what makes it a soft edge buy signal. A soft edge buy signal must always be preceded by what we call a test of the extreme. Essentially, a test of the extreme on a high would look like this. The market comes down a little bit, goes up, fails, and then we have a pretty good idea it's going to try to head lower. A test of the extreme to the downside, just the opposite. Comes up a little, comes down, fails, and then we expect the market to head the other direction. All right, so we've hit the break-even trigger, stops automatically rolled to break-even. Hopefully we'll get our profit objective. So the soft edge buy signal, this one right here, must always be preceded by one of these. And it's a little bit of a jumbled mess through here, but it came down and it actually gave us several retests of the low. And then they gave us one here that actually fudged by a tick, which doesn't negate the whole premise. And then it came back with a buy signal. So I could have bought here, but this one never triggered. And then it came back at precisely the same level and triggered a buy. Perhaps my break-even stop was too aggressive. They came in there, tagged us at break-even, so I got a couple of break-even type trades. But that's the soft edge buy. Oh, here, before I forget, there's some system add-ons that you're going to see here this morning. And all a system add-on means is that it can be used on any chart. It does not have to be a DTS chart. You could use this on a 5-minute chart or a 500 tick chart or whatever you're using. One of these system add-ons is this tool right here. This is the Geiger counter. This is a pretty cool little tool. It's essentially a tape reader. So you get the historical time and sales through here. So you can see there's been quite a bit of buying pressure, and it looks like the seller's kind of holding steady, not really absorbing all that buying pressure. Not yet anyway. Then we have the dial component. Now the dial I find very helpful because here we're working on some warning dots. It's not a cloud crossover signal just yet, which is another one of our high probability signals. But when this signal is developing, I like to see, did you see how the dial pulled over? Ooh, see that? How it pulls over and holds? If it pulls over and holds for like 3 or 4, maybe even 5 seconds, that shows some very aggressive buying. And as a result, we should see the market tick higher from here, at least, you know, for the short term. So it looks like right now the buyer's trying to get pretty aggressive. If we don't get the follow through higher, that tells me that the sellers have absorbed all that buying pressure, that resistance is going to hold, and prices will head lower. So a very helpful tool. It was actually designed because one of our owners said, can you give me a tool to help me decide when I should get out of a trade? Like, let's say you're in a, oh no, the market's been kind of choppy. But let's say you're in a good trending trade and you're trying to decide, should I stay in or should I get out? Well, if you're long, if the market's going up, let's say we're long here and we see the Geiger counter keep pulling and holding to the short side, we may not necessarily want to exit, but maybe we'll go to a different stop strategy, something that's going to keep the stops a little handier, or maybe the bar high-low, you know, keep the stops kind of close by, or maybe even tighter still, right? So you get the idea. It's a very helpful tool for helping you gauge whether you want to take a signal, what the market strength is like, and also whether you should be more aggressive with your stops. Okay, while we were showing that, we actually got a couple other signals. We got another first micro-macro cross signal here on the hawk. That's one of our high probability signals. So you might be nursing a buy signal here. Stop should go down below the low. I think that's pretty obvious. Darn it. They hit the break-even trigger. If you're running one, came back, tagged you at break-even. We are getting a 4-arrow consolidation signal here, which I'll point out. Oh, darn it. Don't run away on me. No, there they go. I was a little bit slow pointing that one out. 4-arrow consolidation, 1, 2, 3, 4 signals. We anticipate the market to rally on the 4th signal, which is what it did. So there they are, doing their little thing. And I bet we also had a signal here on the Falcon and the Raptor. Yes, we did. So we had a Raptor signal right here to buy. Don't worry, we'll get another chance. It looks like we're going to get a cloud crossover here. Cloud crossover occurs when the clouds cross over. The market tends to retreat into the cloud, then come out of the cloud with a signal. Normally, the cloud crossover is a pretty strong signal. You do need to take the market context into account, though. Oh, see, here's a good cloud crossover. So we had a little bit of an uptrend, the market comes down, clouds cross over, market retreats into the cloud, comes out, produces a sell signal, and you can see we had some pretty nice follow through from there. Yeah, okay, now Andrew says the NQ was producing all these sell signals, but it went up. Okay, let me point something out really quick here. We do not take every single signal. I'm going to show you here what we call a cheat sheet. Bear with me. Stop it. Oh, stupid computer's not cooperating. There we go. This is what I mentioned earlier. You may not have been in the room yet, but for instance, here on the Hawk Scalper. Now, the Hawk Scalper seems to produce a lot of signals, but these are the 5 high probability signals that we look for. So again, they're really easy to identify. We've got our first micro-macro cross that occurs when the micro line, that's a thin one, crosses the macro line, and everything comes into sync. There's a lot of signals require the signal to be in sync. So we've got green bars, green trend lines, green filter. That's the first micro-macro cross. Note the next signal we did not highlight because it's not a high probability signal. After that, we get the macro pullback signal. Also easy to identify because everything stays in sync except the micro line. The micro line goes out of sync. After that, we have a 4-arrow consolidation, which I just showed you occurred. Then after that, we get the post-consolidation pattern. In this case, it was also a macro pullback. Note the trend line went out of sync. And then last, we get the red bar buy, or in a downtrend, we get a green bar sell. Now, this is actually a signal that we can take with trend or against the trend. We can short it, in this case, short it below the lows, because this signal tends to happen toward the end of the trend. So that's just on the Hawk. We'll have comparable signals for the Raptor, but just because the market is producing an arrow does not mean that you're necessarily buying or selling. You know, the sell signals down here were not one of our high probability signals. The soft edge buy signal, this one right here that I tried to show you, was a high probability signal. Unfortunately, my break-even stop came up a little bit too quick, but you see the signal was still a valid signal. All right, so I hope that clarifies things. You're going to see signals here on the other tools as well. For instance, here on the Falcon, this signal right here, this is one of our high probability signals. That's called the trend change signal for obvious reasons. See, trend change signal. Trend line changes color. It's essentially the first signal where everything is in sync. Very high probability signal. Late filter entry signal. Filter goes out of sync, comes back into sync. Trend line never changes color. High probability signal. Trend line touch signal. The market retreats back into the trend line, bounces out, produces a signal. These are the 3 main signals that we focus on with the Falcon. So here is our trend change signal. Trend line changes from red to green. We get the market doing this, get the market doing this little up, down, up pattern, which is characteristic of the trend change signal. And that's a high probability signal. So now it's up to you. How do I want to set this up? Well, okay, there's the signal. Where am I going to cover the trade? Do I want to cover below the low? Do I want to cover below this swing low? But it's a high probability signal. There's a very high probability the signal will at least reach our profit objective. All right, so that's Something to remember, we don't necessarily take every single signal. We tend to focus on the higher probability ones. Before I forget, let me point out the lines that you see on here. This is another one of those system add-ons. This is the Ultimate Support and Resistance Suite. No, these are not pivot points. No, these are not Fibonacci retracements. They're much better, and I say that all modesty aside. The three main lines here that you see in the middle, the gold line and the two blue lines, this is the median line, primary resistance and primary support. These tend to set the tone for the day. So now that the market is getting above the primary resistance, we may actually see a more bullish day. So we might want to keep a lookout for that. Looks like the buyers smacking the sellers pretty good. And the Trade Forecaster, this is another add-on. You can see the Trade Forecaster says we're in trend mode for a little over an hour, and it looks like right now it's dead on right with that. After that, it's going to go into scalp mode, so it's going to hit the skids pretty quick after the market starts to come out of trend mode. Here on the Hawk, let me just point out, see down here, we had the 4-arrow consolidation. Coincidentally, within that 4-arrow consolidation, there was always also the first micro-macro cross. So two very high probability signals pretty much overlapping. Here we have, oh, look at that, another 4-arrow consolidation. Right, so when the market starts drifting a little bit sideways, we're waiting for a signal to develop. You notice, oh, there's one signal. Oh, there's two. Oh, there's three, and the market still hasn't moved. So now you get a little, you get ready, right? Where's that fourth signal going to print? Okay, there's the fourth signal, throw in my stops. And even if you'd scalped out on target, a nice little scalp for you. No trouble whatsoever hitting that profit objective. Oh, and by the way, you can, I have a tendency to go all in, all out on target. You don't need to do that. You can preset your profit targets. Let's say you wanted, I don't know, let's say we're going to take a third off at 10 ticks and we want to take a third off at 20 ticks. And let's say we want to leave the rest as a runner. So you see we're taking a third, and, well, roughly a third. We can make it more precise too. We can go exactly there. So let's say we're looking at a trade like this 4-arrow consolidation and we're setting it up and it's like this. So now I have the trade manager automatically has set my profit targets. So I've got one target at 10 ticks, one target at 20 ticks, and the last one on as a runner, providing, of course, I can capitalize it to take 3 contracts. So if you're thinking the market's going to make a big run, higher or lower, see, here we're back to this 4,400 area I was talking about this morning. You can certainly put a runner in play. You don't have to be all in, all out. And then once your order is active, well, then you can move your profit targets or close them out or do whatever you want. So it's very helpful that way also. Pretty cool, right? It is. It's, without a word of a lie, it's got to be the most sophisticated trading software that I've ever come across, especially this trade manager component. All right, so we had a couple of moves there. We'll just A couple questions. Mo is asking, Eric, is oil inventory today or tomorrow? Because of the July 4 holiday, oil inventory is tomorrow, Thursday, at 11 a.m. Tom's asking, so the cheat sheet is used on all four of the charts, including the Raptor? Well, kind of, sort of. I did a cheat sheet for the Hawk. That's the scalper here. I did a cheat sheet for the Falcon. That's the swing trader here. I have not done a cheat sheet for the Eagle or the Raptor yet. And it's not because there aren't solid signals that we look for. It's just I haven't been able to find a screenshot where all the signals produce on one screen. You know how I had it so nice here with the Hawk. See, all the signals produce so nicely. I haven't found a market move that has shown all the Eagle signals or the Raptor signals on one chart. So I know I'm probably going to have to break it up and make several. But yes, there are high probability signals for the Eagle and the Raptor, and I'll go over those just quickly for you. We got to find a section here where it's actually trending a little bit. One of our high probability signals, I'll start with the counter trend signal, and I hope I won't confuse you, is what we call the rule of three. So rule of three occurs when we get the market starting to produce counter trend signals against the band. So we have a bullish band and we start printing counter trend signals. Normally after the third signal, the market tends to move the other direction. Now the rule of three is just, it's loosely three signals. Sometimes the rule of three will be four signals, sometimes it will be two. But here's the catch. A rule of three must always be preceded by a test of the extreme. In this case, the extreme is the high. Here's the failure. There's the signal. Now we know it's safe to short. If you decided to use the rule of three simply as an early warning that the trend may be changing, you would be on the alert for a trend change signal, which is pretty much the first signal that is in sync when your cloud changes direction. So there's your trend change signal. Then your next really high probability signal is this guy down here, which is your green bar sell. Now I know I mentioned that most times the signals we're looking for are in confluence, and very often we will get a red signal producing here, but what's important about the green bar sell is that whenever the market encounters the hard edge of the trading band, we anticipate a reaction. So the green bar sell is that reaction. What you have happening here is you have a market that is obviously in a downtrend, and then all of a sudden it's almost like the buyers sneak up on the sellers. So the bars go from red, all of a sudden they turn green, and it's almost like the sellers finally wake up and say, uh-oh, what's going on here? And then they come back with some very strong selling, and they produce a sell signal, the red bar, or the red signal, on green bars. That tends to be a pretty solid signal, the green bar sell. And then in an uptrend, if we have an uptrend, well, it's not ideal, but we get the red bar buy, where the market comes into the hard edge, we anticipate a reaction, and we produce red bars with a buy signal. That's the red bar buy. So here is a rule of three to the downside. Here's the trend change signal. And then we come back with actually a couple of red bar buys. You can see there's a few through here. before the next move higher. All right, so those are your basic eagle signals that we tend to look for. And we go over these every day in the trading room. So as a DTS owner, you have access to the trading room. We don't just toss you to the wolves, say, here's your system, go learn how to use it. You know, we walk you through the signals every day as often as you need to see them. So I've already mentioned the soft edge buy signal on the Raptor. Here was a soft edge sell. This one was a little less obvious because we have just a tiny little retest here, but it is a retest of the high, a failure. There's the sell signal. Here's the cloud crossover signal. So crosses over, clouds cross, market retreats into the clouds, comes out, produces a signal. You have your basic hard edge bounce signal. Very often the market will retreat into the hard edge of the band twice and then come out with a signal. So here's the hard edge bounce. You could have considered this a cloud crossover signal. I would have. You got a little bit of heat on it. The market moved sideways for about a half an hour or so. This is after hours before the London Open, and then we finally got the rally. But the signal picked up the shift in market momentum well before the signal even, well before the market took off. Here's another soft edge buy. See, right here. See our little retest, failure, the market moves up and keeps moving up. So those are the high probability signals that we're looking for on the Raptor. And if I ever find a screenshot where everything is on one, I will make a cheat sheet for those as well. But like I said, we go over it every day in the trading room. And I probably will end up having to splice a few charts together. Angie is asking, are you on a 1-minute bar chart? No. Thanks for pointing that out, Angie, because I forget to mention the indicator warehouse mean Renko bars. Terrible name for a very good chart style. The mean Renko bars incorporate the best elements of range style bars like Renkos, along with the sensitivity of a candlestick. The beauty of the mean Renko bar is that you can see very plainly where the buyers and sellers are at. And because they're a range style bar, they'll only print when the range of the bar is met. So here on the Hawk Scalper, we're running a 6-tick brick. So that means it doesn't matter whether it takes 10 seconds or 10 minutes. This bar will not print until the market has moved the range of 6 ticks. But you can see, you know, you don't always see this on a time chart or even a tick chart. You can see very plainly that's where the buyers are, or pardon me, that's where the sellers are. This is where the buyers are. The buyers are trying to move the market a little higher. You see how it's gaining some momentum. If the sellers start to press here early, we'll see very plainly that the sellers are a little bit stronger. The mean Renko bars, by the way, is a system add-on. It's the default for the DTS chart. You can use DTS on time-based charts if you prefer. So let's say I want to throw it on a 1-minute chart. You see the signals still end up producing. You still get signals. It's a slightly different look. You could use tick charts if you prefer. Pretty much everything except some of these exotics. You know, Kagi charts, point and figure, line break. Oh, actually, I think I played with the line break before, and I think it actually produced signals with the line break. Yeah, you are getting some signals. So We got like a first micro macro cross here. We got a macro pullback here. But you know what? It was designed around the mean Renko bars, so I think I would probably stay with those. Now, let me point out also, I'm using the Indicator Warehouse dynamic equivolume bars while we're talking about chart styles. The dynamic equivolume bars, if you're unfamiliar with equivolume charting, what equivolume charts do is they factor the volume into the graphic. So wider bars have more volume, narrow bars have less volume. See, what a lot of people don't realize is that when the market is rallying, it's actually rallying on very light volume. Yes, the whole bar itself, like you look at a time chart, you'll see this big breakout bar, will have a lot of volume associated, but bar for bar, it's actually fairly light. It isn't until the market encounters resistance that you start to see the bars get wider, and that's what you would expect, right? Because now all of a sudden there's more selling coming in, absorbing all that buying. So very helpful for identifying what are potentially very strong support and resistance levels. You can see right here, 44.02, 44.01, whatever the high of this bar is, 44.01, that's a pretty influential number. I bet you the highs of these bars were 44.01. Oh, pretty close. And again, that's an add-on. That will work on any chart style. What makes the dynamic equivolume bars different from other equivolume charting is that it works on any chart style. Usually equivolume charts only work on candlesticks. These will work, as you see, on the mean Renkos. It'll work on a regular Renko. It'll work on a tick chart. It'll work on whatever you want. All right, well, here it looks like we got a little bit of a soft edge sell now on the Raptor. Expecting the market now to move to the hard edge of the band. That was this one right here while I was talking. So we see we have an uptrend. And the market comes down, retests the high, comes back, produces the soft edge sell signal right there. That's the opposite of the soft edge buy that we took from down here. First target, the hard edge of the trading band. And there we go. Boom. The hazards of a trading room moderator when we're demonstrating stuff is sometimes you end up missing moves like that. In the daily trading room, we're a little bit more focused because everybody already is familiar with some of the software. But I should point out that the trading room is not just a trade call room. I do try to highlight good trades for you, but it's also a trade education room so that you can learn how to use your own system. It's like one of our members so eloquently put it, I appreciate you calling the trades, Eric, but heaven forbid you get hit by a bus. I want to know how to do this for myself. All right, a few conflicting signals. We're getting a first micro-macro cross lower here, but we're into the hard edge on the Eagle and the Raptor. Remember what I told you, whenever the market hits the hard edge, we do anticipate some sort of reaction, but each of these tools are programmed independently. So just because the trend trader is not showing something does not mean that the scalper is not giving us a signal. So there's the first micro-macro cross signal. Problem I'm having with this signal is there's very little structure here. If I'm going to cover this trade, I pretty much got to cover it way up here because that's where the selling really started. If we get filled and the market, there's a chance it will retreat into a macro pullback signal, maybe even a green bar sell. I don't want to get stopped out early. Why? Well, watch what happens. So my stop is way up there. My risk is $300. What if I place my stop closer? What if I place my stop right here above the high? Oh, well, okay, rounding error. But the risk is still around $300. What if I place my stop up here? Again, rounding error. 2% of my capital will allow me to risk about $400. So depending on how the rounding is occurring with these contracts, I could end up having anywhere from 1 to 4 or 5 contracts. But again, the point is that the trade manager never allows me to over capitalize on a trade. All right, so what I'm going to do is I'm going to delete the break-even and profit targets. Looks like we took a little bit of a slip on this. And after that move lower, we need to see a little bit of bearish follow through here. I should, in actual fact, as choppy as the market is today, I would probably take profit on target. So if you're looking at this type of trade, you may want to get out when you hit your high probability target. But because we're in the demo room, I'm going to see if we can't catch a little bit of a move here, maybe a nice second leg lower. I would say the sellers owe us one more move lower. See, we've broken reasonable support here. Why is that important? Well, if we break support, we can usually anticipate 2 moves in the direction of the breakout. So here's move number 1. I'm looking for this guy right here. But I don't want to get stopped out on this part right here. I do believe the buyers, that this is more of a buyer's market today, though. I do believe the buying will be a little bit stronger than the selling. All right, come on, sellers. Where'd you go? It's a pretty crummy fill anyways, slipping us like that. All right, well, we'll just try to nurse that trade a little bit. You see, here's that reaction to the hard edge. Oh, look at the width of that candle. Right on the hard edge. That's where we got the support coming in, right? That's where all the sellers or all the buyers showed up. So it looks like we have about 6,000 contracts traded on that particular bar. All right, here we go. Come on, somebody get down there. I think 43.88 was a pretty big number for us yesterday as well. Come to think of it, I think our primary support line fell on 43.88. So we're kind of sandwiched between 43.88 and 4,400-ish. Well, the sellers will have to step up here soon. All right, so did you notice the micro line has changed color? So the micro line is green. Everything else is red. This is now technically a macro pullback signal, which is still one of our high probability signals. So if you didn't short the first micro-macro cross, we've got the warning dot anyways. We don't have the complete signal yet, but we've got the makings of a macro pullback. And this is what we were anticipating when we put this trade on, how I said there's very little structure up here. That's why we've got to keep the stops so far back. And once the trade goes live, you can adjust your stops, right? You can move them wherever you want. All right, well, we'll put that on the back burner for now. We're getting a comparable signal here in crude oil, for those of you following crude oil. Aha, another first micro-macro cross to the downside. You see here was a first micro-macro cross higher, and the market went up. Oh, look at that. There's a macro pullback signal. Market went up. Now we've got the first micro-macro cross lower. We've got the warning dot. I know from my handy-dandy little logic counter, those are the little numbers that you see above and below the current bar. I know where this bar will finish, so I can anticipate the hash mark printing right there. But the problem with crude is I can't afford to cover it up there. To see how Trade Manager prevented me from taking on too much risk, it said, no, sorry, Eric, you can't afford that trade. Not at 2% of your capital. I can dial it up. I can change it, say, maybe 4%. Generally speaking, anything less than 5% is considered prudent. So there's 4% of my capital. If I wanted to take that risk on, I could look at shorting crude. Okay, here we go. So you see the macro pullback signal engaged. I bet you it actually hit its high probability target. Yes, it did. So the macro pullback signal already at target. The sellers kind of recommitting here to the market. I'm going to, certainly if we take out these lows, it'll be a good time to roll the stops in a little bit. There we go. Come on. Somebody get down there. Pardon me. There we go. All right, so now I'm going to engage my stop strategy, and see how Trade Manager automatically took it, pulled it down here, and now it will continue to roll. See how it's automatically rolling my stops based on my stop strategy. And if I get anxious about the trade, I can send it to break even. Currently it's set at break even +1, but you can set it at whatever you want. You can even set negative break evens if you want. We'll try to let this one run out a little bit. The seller's really trying to make a break for it. Yeah, that's an interesting comment. Andrew says, I've got I have a chart with the hawk, but I also put the eagle cloud on it. I really like having it on one chart, as I don't trade the eagle. It's too big for me. You know, the beauty of the DTS system is that it's a very robust system. One of the DTS owners really likes using fast stochastics. And so it's okay. Go ahead, throw fast stochastics on your chart. The only criteria that I have for that kind of thing is, does it help you make a decision? If it does, then by all means, go ahead and use it. If it doesn't, get rid of it because you don't need it. Ryman says, Eric, I'm a chicken today, just scalping. That's okay, Ryman. You know, it's not profit until you put it in your account. The market has been a lot more volatile since that whole British exit thing last week. We've seen the ranges. When the ranges happen, they seem to be big, but there's also a whole lot of sideways trading. We're getting a little bit lucky today because the market's actually giving us more follow through. I don't know if I'll be able to ride out this second swing though. Once the trade manager has your trade, however, the nice thing is that you can go around and you can find other signals. Right? So here was a nice trend change signal on the Falcon. So we could have hopped on board that one also. Set it up maybe like so. So there was a nice little trade to be had. The Eagle hasn't produced a signal yet, but what about the Raptor? Oh, look at that little cloud crossover signal. Kind of occurred right as the clouds were crossing, but it's still the same thing. So you had the soft edge sell signal, cloud crossover signal, both of which had very nice follow through. Yeah, I was reading a little bit about that. Tony says the market's moving today because Hillary has escaped the shackles. Oh yes, the presidential campaign this year should be very amusing, if nothing else. And I don't mean amusing in a facetious way, but I mean amusing in a very entertaining way. It's an easy day for the news people on both sides of the trading or the political aisle. Almost as crazy as Canadian politics. Or here in British Columbia about 15 years ago, no, I guess longer than that, 20, 25 years ago, our politics were, well, I want to say world renowned, but there were a lot of people from all over the world who would be writing me about what was going on in the provincial government. It's like, Eric, is that really happening? Yeah, that's really happening. Yeah, Andrew says, at least our boss is suave, our prime minister. Yeah, I know, but sometimes I wonder if he shouldn't be running the country rather than being on the cover of Vanity Fair. Anyways, that's politics. That's a different forum. That's the other chat room. All right, so here actually we had some more overlapping signals now that I look back on it. We had the first micro-macro cross, which is the signal I took. We had the macro pullback signal, and look, we also had another 4-arrow consolidation all building in the same place. Sometimes that happens, that you'll get the signals overlap, but regardless of which signal you saw, you can see that it was still a very high probability signal, which is why we focus on those. Here come the buyers, though. They're starting to dig in. 43.76. Is that one of our, oh, look at that. Is that one of our support lines? Yeah, look at that. Nailed it right on the median line. And now the market finds support. A lot of people like to use the support and resistance suite as profit objectives. I know Omar always used to do that. So if he was looking at this signal here on the Falcon, I know Omar was very aggressive with his stops. He would usually throw his stop on the other side of the support line, in this case the primary resistance. I can't do that. That's a little bit too tight. I'd probably have to risk it to the crest, but he would definitely use the next support zone as a profit target. Boom, down she goes. So a nice little bounce here off of the secondary resistance, back down to the primary resistance, broke there, back down to the median line, and that's where we sit. So always handy to know where those support and resistance lines are at as profit targets or possible profit-taking zones. Let's see if they're going to allow us to ride this out. We're still working on the magic mouse. I'm going to try to pull the market down here. Come on, get going lower. Come on. See, it works. Just got to grab it just right and pull the bar down. Whew, that was close. Uh-oh, it's getting away on me. Come back here. Come on. There you go. Just pull the price down. Oh, no. Sorry, it's still in beta. Still has a couple of little glitches in it. All right, so that's essentially the tools. The market seems to have been slowing a little bit now, as it appears the buyers are stepping in to take their turn. Yeah, thanks, Tony. Tony's asking, how's your back? It's still pretty tender. I've got a brace on now, which is very helpful. Keeps me from bending in a stupid sort of fashion. It's much better than it was. As I shared with you guys before, I went for an X-ray. Excuse me. And the radiologist saw something they didn't like, so they don't come right out and say it, but you know they're thinking cancer. And so they sent me for a bone scan, an MRI, and a CT. My chiropractor said, who saw the X-ray, said, Eric, don't worry, I've seen this 1,000 times. I got like a little bone spur or something. But he says they're dotting all their I's, crossing all their T's, which is good. Anyways, all the tests came back the same thing, that I've got some arthritis in my back. But what was astounding is the week of those tests, I felt like I was 100 years old. I could not move. I could barely get out of bed. Some of you in the trading room remember I had to close the room down early a couple of days because I just couldn't sit in my office chair. It was painful. If I had a walker or a scooter, I would have used it. And the week before that, I was fine. It just, within the span of a week, it was like I could barely move. And I'm on the mend. It's much better than it was. Almost back to normal. Still can't swing a golf club, which annoys the heck out of me. Oh, Andrew, yes, I did respond to your question. Andrew's asking, what about putting the eagle cloud on the hawk chart? Is that okay? Yes, Andrew, absolutely. The criteria for putting anything on your chart, and I mentioned that one of our owners, he likes to Actually, I worked with one fellow who liked Bollinger Bands, and I worked with another fellow who liked stochastics. We'll use these. The criteria for doing anything, and anything like this, whether it's the Eagle Cloud or a secondary indicator, does this help you make a decision? If this helps you make a trading decision, then by all means, go ahead and use it. So if the Eagle Cloud helps you make a decision, keep it. If Bollinger Bands help you, keep it. If not, get rid of it because you don't need it. As traders, we have a tendency, we're all like a bunch of crows. We like bright, shiny objects, right? We love to tweak our indicators. We love to play. And if you excuse the crudeness of the comment, you want to trade to make money. You don't want it to be mental masturbation, right? There's a lot less expensive hobbies than trading. So if you're interested in trading to make a living, then you need to be serious about it. If you're just trading as a hobby, that's okay. That's fine. You can do that. It's your money. But just realize there are less expensive ways to entertain yourself. I should point out the DTS system is a locked system. There is very little you can change in the system. The Raptor is a little bit more customizable. It still doesn't allow you into the key settings, but with the Raptor you can change a few more things, how the tool actually works. But the tools themselves, the programming is locked. And I should point out also, this isn't, just like a moving average crossover system. It's not that. The program has been stripped down to be as clean as possible to generate signals that are easy to interpret. But there's a lot going on behind the scenes for each of these tools. There's about a half a dozen parameters that have to be met before you even print a warning dot. Oh, here we go. Here's the first micro-macro cross higher. Again, the structure a little bit sloppy. Oop, doggone it, they ran away on me. Shoot. All right, well, there's the trade anyway. Just missed hitting the submit button. But again, high probability signal, right? That's what we focus on. Getting a trend change signal now in the Falcon. So we can try to get on board there. Got to risk it all the way down there. Oops, I still have my click targets. And we should have a comparable signal on the Raptor. We do. So we can try to take that one. Oh, no, it's not a cloud crossover yet. We'll negate that. And you'll notice this is not a soft edge buy signal. Why is that, class? Why is this not a soft edge buy signal? That guy right there. It may go higher, but why did I not buy it? Yes, Tony, they ruled out the cancer. There's no cancer. My chiropractor said, no, don't even worry about it. The bone scan is like 99.9% accurate. And I just get to suffer with the arthritis. Yes, thank God is right, Tony. Keith says, too close to the hard edge. Well, no, not a bad guess, Keith, but that's not right. Andrew says the filter at the bottom. No, that's not it either. There you go. Tony got it. No test. No test of the extreme. We didn't get a retest to tell us that this market is actually ready to head higher. It may well go higher from here, but because we didn't get that test of the extreme, there's a real possibility we could get a fairly deep retracement here, maybe even a resumption of the downtrend. So that soft edge buy and soft edge sell must always, always, always be preceded by a test of the extreme. That's what made this a soft edge sell. That's why we had the follow through. This one is not a soft edge buy. It may turn out to be nothing more than a hard edge bounce. We may actually be producing a sell signal here, and the market may come on with a full hard edge bounce and send prices lower. We don't know yet. We're still waiting. And our signal drifted here from our Falcon trade. See, we're away, so we'll close that. And now we're kind of on hold. Yeah, Ryman says, I don't like the yellow bars on the Raptor. The yellow bars tend to show neutrality. And if we had the retest here, I would take it still on a yellow bar. That doesn't bother me so much. Okay, now we've got a little bit of a retest. Now we've got a little bit of a cloud crossover thing type happening. And we may even get the opportunity on what we call a second push entry. So the second push entry simply means we allow the signal to engage, and then we allow it to retreat from the signal, which is exactly what it's doing here. This shows us the current limit of the market. So we know that the sellers are very active here at 43.90, 43.90 quarter. So I'll enter at 43.90 half. I'll place my stops maybe below the lows. And this is starting to resemble a cloud crossover. But that second push entry, when the market seems to be going nowhere and you're not really sure, you can rely on that second push entry to help keep you on the right side of the trade. Okay, last chance for the buyers. They got to maintain this higher swing low, or it's going to be game over. Not really liking the sideways nature of the market right now. And the longer the market goes sideways, the less influential this morning's rally will be. So we're, about an hour and 15, 20 minutes into trading. If they keep moving sideways here, just go down, go up, go down, go up. If they continue to do that for the rest of the morning, then that early rally that we saw is going to have very little influence over the market. And now we kind of can cancel that cloud crossover because the clouds are no longer crossing over. All right, so we're back in hold mode. The hawk starting to print a lot more yellow bars. Yellow bars a sign of neutrality. Kind of confirming what we're seeing. A lot of sideways action. The eagle all twisted as well, pretty much skewered by the trading band. Oh, we may get an eagle buy signal now. So we did get a red bar buy here. The band flipped ever so slightly, not really enough to negate the signal. We'll see if we come back now with a buy signal on the eagle. There it is. All right, so we've got our buy on the eagle, and we'll see whether we get a little bit of a rally out of this as they try to maybe press back toward the highs. We would have got comparable signals, by the way, on the, here's the Falcon signal. The Raptor came back with another cloud crossover right here. So a fairly active morning for kind of a quiet morning. Oh, thanks, Ryman. Ryman says 2 p.m. Eastern FOMC minutes. Doesn't seem to be weighing the market down too much, not yet anyway. Come on, get up there. What do my ATR stops look like? Yeah, I suppose I can enable those. So you'll see the trade manager when this bar completes, or I can click accept. Well, as soon as the bar completes, it will grab my stop and roll it up. There it goes. And if the market is, let's say I want to give it more room, I can always manually pull the stop back. But if I want it to stay here, I need to remember to disengage the auto trailing, because as each bar closes, it will grab my stop and move it back to the current stop strategy. All right, so we've hit the break-even trigger, and they're going to try to press the highs right back at that 4,400 area. I could go with a more aggressive stop strategy, or, you know, I can just grab the profit too. I could just close out. Come on, get up there. We'll give it a little nudge with the mouse. Come on, give it a little push. Get up there. There we go. Come on. Take out the high. They know there's orders up here. Everybody knows there's orders. There we go. Everybody knows there's orders at 4402. So they just get up there and tag 4402. And if we're going to go sideways, we're going to see the sellers get all nasty and jump all over the buyers again. But a nice little solid signal, one of our high probability signals. Good follow through. We had comparable signals on the other tools, all of which managed to find their targets as well. Ryman's asking, what are your current break-even settings? I like to set mine at about anywhere from 75 to 80% of the profit target. So here on the Hawk, I've got a 10-tick target, so my break-even is at 8 ticks. Here on the Falcon, it's at 20. I believe my break-even is at 15. And then here on the Eagle, my target is 40. I believe my break-even is at 30. Or 25 or 30, something like that. I figure if the market gets 3/4 of the way to its profit objective and fails, then it's probably time for me to take my break-even hit. Most times that works to my benefit. This morning you saw on one of the trades, the break-even trigger brought me up just a little bit too quickly. But you can always change your break-even settings or negate them altogether. All right, well, the buyer's still in full-on control of this market, and it's probably going to see the market try to rally maybe into yesterday's gap. Yesterday's gap never got filled, which could see prices trade as high as 44.30. Imagine that. That would be a huge day for the NASDAQ. All right, you guys, we're getting near the top of the hour. We're going to close down the trading room shortly. If anybody has any questions, please type away. If there's a market you'd like me to highlight for you, I'd be happy to show it to you. Otherwise, we'll wrap things up for the day. And DTS owners, I'll see you back in the trading room tomorrow morning, bright and early. Halfway to the weekend. Woohoo! We've actually had a good week this week. This week, I don't want to jinx myself, but this week has been a good trading week. No questions? All right. Well, thank you very much for your attendance today. I hope I was able to answer some questions for you. If you have any other questions, feel free to email me, Eric at you can use my Indicator Warehouse address. It goes to Adam first, but Eric at supportandresistance.com is my email. Or if you have questions about the system itself, you can email Adam directly, Adam at indicatorwarehouse.com. And well, we'll do this all over again next week. Hope that you'll stop by. And DTS owners, I'll catch you in tomorrow morning's trading room. We'll talk to you then. Bye for now.